Welcome everybody, it's the Market Sniper doing an update for ITM Trading. The search for a new reserve asset. This is going to be a very interesting topic. I think you're going to enjoy this video. It's not overly technical like many of my others, but I'm going to talk to you about the death of one form of reserve asset that has existed for the last 40 years and has been the makeup of the 40% in the 60-40 portfolio. And this is the debt markets. What actually happened post the Volcker era? Which of course was the last time gold traded up to its super high bull run highs around the $800 mark way back in the Volcker years. Gold got definancialized. Oh, it doesn't pay interest. It's a pet rock. All the kind of things that someone like Warren Buffett would say. It no longer even served as a reserve asset. Hence why it doesn't exist in the 60-40 portfolio of the 80s, 90s and noughties era. That turned out to be a big error. Previously, 5, 10, and even 20% of people's portfolio were made up of gold. There are legacy Italian families of great wealth that have 33 1/3% in gold. Gold, property, and then equity. Bonds and the US government issued debt no longer stand on a risk-based reward basis as a solid asset to have in any form of portfolio. In short, we're quite extreme. We feel since 2020, when the bond market turned, we called it in August, and we've had the likes of Paul Tudor Jones, Stanley Druckenmiller, and Zero Hedge cover that during this year. Now that they've probably repositioned their book for that point as well, that bonds are a busted investment. So we no longer stand alone in that. It has taken 4 years for that to be mainstream recognized by the big minds and for them to discuss it, which probably means they realized sometime before that. And yeah, it's great to have that level of endorsement catch up with a position we took a long time ago. Now, what the 40% did is you chased the alpha with the equities in the 60-40 portfolios. And that was your go-go growth and your dividends, etc. And the stability was provided with a little bit of counter-cyclical protection by the debt market. So it became a very simplified world, a very binary world. When everyone was afraid in the stock market and there was potential crashes and corrections, a lot of money crowded into bonds and you got actual capital gains in the bond market. Now, bonds were typically government gilts, debts, all these instruments, very boring markets. They didn't move a lot, but they would have stronger years in the years where equities were weak. So there was this counter-cyclical benefit in terms of risk adjusting. In other words, the volatility of your portfolio by having this diversifying element. Also, they paid a yield. However, from the Volcker era to more recently, the 2020s, that yield got ever lower and more insignificant. And of course, the inflation, the true inflation that you're fearing, has actually been climbing higher. And if you look at John Williams' shadow stats, that yield is almost negligible versus what you're potentially facing. Certainly in 2020, when it fell to 0.3. Of course, rates have risen a little bit, but they still accepted to be well below the aggregate of your true inflation, which is the proliferation of liquidity by your central banking cartel. And that has been very high. We know that Janet Yellen has been creating, although she's to stand down, over $1 trillion every 81.5 to 100-day period. And we can't see that changing too quickly, despite the optimism of the Department of Government Efficiency under Musk and any of his friends, Vivek, etc. So what do we make of this cyclical major change that occurred in 2020? Well, I've done a sort of planetary diagram to try visualize this a little bit and help people see where we are with our current position. We have a Jupiter of fiat currencies that have been borrowed by debt. So they're twin sisters. They both birthed into existence at the same time. Treasuries, gilts, and currencies. And it's a Jupiter. It's a legacy system. And it is vast. And that is what I'm illustrating over here by this graphic. And then we have a true multi-generational, the legacy system of all millennia, gold and the precious metals, which is the original system, the original gangster, if you want, as reserve assets for millennia. However, they got sidetracked. They weren't part of the 60-40 portfolio, where previous portfolios and legacy families continued to maintain them, on account of the financialization of everything and the expansion of debt, and the reason as to why we have such a huge Jupiter running into absolute quadrillions. By the way, these market caps have shifted slightly. You'll be between 15 and 20 on gold, and Bitcoin has moved quite substantially since this particular video has been recorded. So it's closer to 2 trillion. Anyway, what's going on is this system is in a process of death. We spoke about how interest rates are generally going to go higher despite pullbacks. Even though we felt the US 10-year Treasury would have a pullback and could come deeper, it's amazingly, in an environment where cuts, a final cut is expected from the Federal Reserve, the US 10-year Treasury is reverting back up. This is a 2-day chart to squeeze a bit more material, and you can see 2, 4, 6, 8, well over a week, we've traded back up to the top of what is a falling wedge structure, which typically involves some volatility constriction. It's not squeezing immensely, but eventually leads in an upside break to the upside. Now, I want to just be clear. It's quite possible if we were to have economic crisis, banking crisis, and there's a lot of yield curves that have reverted positive. And so the setup and the possibility of that occurring in the not too distant future is significantly higher for me in that environment, that we can double dip, and it's just a double move, and still do the move we expected back down into this wedge. At some point on the larger time frames, the likely move will still be a breakout out of the structure to the upside. So it's either going to happen very shortly or has just happened. We get a pullback, it gets parked up for a while, we dip a little bit on rates because of fear, problems, a little bit of a bid comes back into the debt markets, and I'll be showing you a kind of flow chart of getting in front of the money flows in a minute on exactly that. But why are we spending our time talking so much about debt? Well, you see, with this loss of real returns, the rates not actually meaning near as much as they used to on account of inflation and fiat proliferation, and the loss of value implied in the interest rates going up, no longer make this a stable, worthwhile asset that is counter-cyclical to hyper overvalued equity markets that could crash 30 or 40%. In short, the 40-year bond usage period, now that we have gone beyond a certain level of percentage debt, no longer is a suitable reserve asset class in our opinion. And that as rates continue to go higher, we're likely to have an interest rate spike, and the capital values during that period could crash exceedingly low, making many believe there's even a possibility of zeros, a debt-based reset, forgiveness situations, and a lot more. So a contagion effect in the debt markets is priced in. How does that suit as a reserve asset? Well, the risk-free rate of borrowing that we were all taught in our MBAs or chartered financial analysts programs or any other economic study programs clearly no longer holds as a risk-free event. And what I suspect is going to happen are people are going to discover two things as alternatives. One, you are getting the positioning of Bitcoin as a digital gold, which is seeing that some of the money that would have normally run naturally on the superhighway to gold as legacy, multi-millennia, Pavlovian responses, physically hold it. It is your insurance policy. It has scarcity, rarity, and all of these aspects. And some of that in the later stage gold bull market eventually to run into silver, a lower price point, also monetized precious metal. That is the typical sequence of events what you would expect in that environment. However, via a tethering system, and more and lots to be said of that, we have now this digital version of gold. And the big proponents and influencers are very much antagonistic towards gold. So if you think of Michael Saylor, we have a video of him saying America should sell all of its gold. Many of us can't agree actually how much that truly is, given that it hasn't been audited in a long time in Fort Knox. Sell it to virtually zero because all our enemies, Russia, China, have been stacking gold. So crash the market by supply, get the money that you would get for that and buy Bitcoin and establish a digital-based Bitcoin. And Trump has shown some sympathy for part of this as a reserve holding asset. So there is this political acceptance of digital currencies has come as part of the Trump trade. It's all about crypto. It's the legitimization of crypto, where previously it was this evil thing that people went and, bought AK-47s online illicitly, bought Pirate Bay drugs and various other aspects. Now there's this legitimization process going on. And this serves as a rival for gold, and hence why the likes of Michael Saylor make these antagonistic comments for their shilling, their support for the digital version of gold almost means real gold has to die. So it's like an imposter. Somebody is copying your profile. He actually ideally is mimicking you. He wants to be everything like you, but isn't you. And ideally, if you died, then he could be the full you without challenge. And this is the imposter syndrome that I feel is in existence in terms of what's going on in the crypto space. Let's just follow through on some of what the overall expectations in terms of this planetary diagram that I've done will indicate. So our expectation is the legacy system, fiat and debt. You're going to see a marked decrease in currencies. It's going to seem like it comes out of nowhere, but prices are just going to continue to escalate feverishly. It's going to be like this, outbreak of inflation. All the inflationary damage has actually been done and we're waiting for it to manifest, but more will be done by the printing. And it's too late for DOGI, the Department of Government Efficiency. In truth, it's way too late. Their powers are actually hamstrung. Government is very different to business. Elon Musk can buy Twitter, call it X, and fire 80% of the staff. You will not have that leeway in government and legalese and all other aspects. You just don't turn oil tankers around on a penny. And they will find this out. So despite the overtures of a greater efficiency brought about by the new pivot under the figurehead, the dark state and the handlers that have brought us Trump, because I don't believe these are his policies. He's pivoted conveniently because he's been instructed on how to handle this environment. And with the debt-based collapse, it's time for the alternative system to begin to be mainstreamed. And when we look at a normal curve of money that's likely to come into crypto and we split it down the middle, there's also a quartile, the tail on the left, and a quartile, the tail on the right. And then you have the two central halves that are along the midline. Right now in crypto adoption, we have, in a shortest time period, the biggest wall of money likely to come in. And here's the thing. Many people, when faced with do I buy gold, will be looking at the stock market and how it's gone up, particularly if you're looking at AI stocks, Nvidia, and tech stocks, although they'll be very, very highly valued, and the current crypto market, will think, why buy gold now? Why not just go into their new system? And I'm all for the hold your nose trade of digitization that will take away a large amount of our privacy and turn us into the surveillance finance system. You have to make money regardless, and if this is what's going to happen, then so be it. And we are seeing the expansion of the market caps of crypto. And right now, gold and silver, tiny bit lackluster. But remember, gold moved first, and that was because of the central banks. Now you're seeing, and you also had big institution and hedge funds. Now you're seeing the clarity coming for crypto with the likely new SEC head, the politicization that is the pivot that is coming under the Trump new broom umbrella. And you're seeing institutional and hedge fund money pre-positioning in what's going to be an expansionary crypto environment. So why participate in gold? Well, we'll be coming back to that to answer it in a minute, but let's just finish this diagram flow as you see it. So through the expediency of Tether, a digitized dollar that can be tracked, traced, and blockchain every transaction requested, information demanded of, tax extracted, knowledge of recipient through a wallet unique transaction ID and a wallet address, and the person who paid. All of these aspects will bring you to your online blogging in the great cloud that is seeing the only commercial real estate growing being that of server farms, this great surveillance finance world that we are stumbling into, where privacy is the greatest victim. Your privacy of what you earn, make, and keep will no longer have the benefit of cash systems, private banks, where only the banks get to see this information, even though, as I say, in due course, it's often passed on to the local government for which you are deemed a tax resident of. These things took time. Now, with AI, robotics, online searchability, this thing is going to come at you real time. And in a world of capital gains tax, including unrealized capital gains tax, we should be quite concerned about the direction all of this has taken. Nonetheless, we need to keep this back on the gold discussion. And whilst Bitcoin and altcoins are moving up, potentially to take over by market cap, physical assets will start to also be registered on the blockchain. So we view the world through three specific apertures, let's call it. I look at it from the reset sniper point of view, which is a global technological Bolshevik communism. In short, they want to know everything you own. They want a token for it so that they can, a derivative proxy token for it, hence the tokenization agenda, which we will be talking about more, so that in essence, everything you own is known and the value thereof. And this makes you invariably vulnerable and exposed if you've self-actualized well in this world for tax extraction on the basis of an equitable society, a fair and equitable society. Unjust means you had special privilege in generating that income and alpha, and you will be rather exposed for all to potentially see, even though there's talk of layers of privacy that may be possible, and that will mask you from the average man in the street. You will not be masked from your overlording governments. So tokenization is a great problem, and physical assets coming, as I've shown here, on the blockchain are indeed very, very concerning aspects for how things are likely to move in the markets. And we see this expansion of this becoming the new Jupiter as the legacy system and fiat and debt goes towards ever smaller. People that are not seizing the new system and getting the benefit of this one-time inflation will see the continual devaluation of their debt instruments they hold as assets, their fiat currency they hold for purchasing power, regardless of what interest rate is being paid on those. They will be net negative to the actual inflation and proliferation of currency that is required to maintain that legacy system until such time as the parallel running period ends and we can sever our relationship with it. So there you have the final complete devaluation where everything has now moved into the digital space and that unique asset class gold and silver, which will initially underperform the cryptos on account of the bulk of the new system for you or I is going to be digitized. So for many of you engaged in the crypto markets or not engaged in the crypto markets, my message is there is going to be a hyper element of inflation as this gets mainstreamed. And we are now in that parabola of the normal curve, the bell curve shape, to the midpoint. So we're going from the second quartile from the left. If the flows of money in a short time, the largest area of money, if we are moving across like this by time, would look, it probably would help if I brought up a normal curve as well, but I'm doing so much diagrammatically, I think you guys get it. Let me just do a super quick sketch like that. and freehand it like this. There's a parabolic, then there's a convexity, and then the flow of money reduces. Now, I don't think the flow will ever reduce too much in the new system. It's not a perfect model for it. However, it's a good one in terms of adoption. It's more like an S-curve. You will have a flattening out. So this would be the acceleration, the second derivative thereof. It would possibly be more like an S-curve. So you will have up, 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 and then flatlining, and then again up, up, up. So the wall of money coming into this new digital world is going to be vast in this cycle. And should you participate in it as a gold investor? My response is yes. It is a hold your nose trade because of my concerns regarding privacy. And in fact, we had a very good trade in XRP, and I'm going to be bringing you back to XRP, where we got from the 50 cents right the way through to over $2.50, and we are still in that particular asset. And I'm going to talk about that particular token more than Bitcoin. Because the interesting thing about Bitcoin is Bitcoin was supposed to be a fully libertarian. And now we're looking at the actual financial world, like BlackRock, being the main driver of setting up exchange traded funds, proxy derivatives that aren't actual holding of Bitcoin, but are proxy versions thereof, with all the same legalese that went for the silver ETF and the gold ETF. And precious metal miners have seen this movie before. Investors, miners, and all participants in that market have indeed seen this movie before. So in terms of everything that's gone on, it was something that was supposed to not be Wall Street, has certainly pivoted very Wall Street-like. However, XRP from the very beginning, and I'm going to talk about this crypto token, said it was approaching banks and central bankers to be the new rails of the financial system in a digital world. Now, I'm not excited about that digital world at all, but at least it's honest. At least it's honest about their intentions. And in terms of its flow, how they put themselves forward, they have not been antagonistic towards gold. They're not trying to be digital gold. They're trying to be the rails of a transactional new financial system where speed, efficiency, and many other things come more into play rather than that which Bitcoin has represented. So I'm going to show you, as we just finish this diagram draw all the way through to its logical conclusion, as we taper eventually to the death and the release of the legacy system, for which you would be a fool to stay and be the last one to switch the lights off on. So we will move to this system, which will have gold, silver, the inevitability of tokenization required for your physical assets of gold and silver, which is why I've warned that you may have to consider whether you want to hold dark off-grid percentage of your metals. Because you will be required at some point to register your holdings and tokenize that, which will then make the physical purchase of them in an online sense indeed possible. And of course, wherever they be stored would be noted, and the ownership reversion would revert to other parties who made that purchase. New system, the BTC, the physical assets on blockchain, right the way through properties, even cars that are depreciating assets generally, but big cost items will end up having tokens associated. This is where you are being taken towards. And during this period, the crypto realm might well overperform gold and silver. However, it's going to be volatile. That means bigger pullbacks, bigger percentage drawdowns, and hence, in terms of your engagement in that market, instead of as stabilizing asset class debt, gold should be the crypto guy's stable coin or stable asset of choice. Now, of course, it's not a stable coin. It does also go up and down. I will highlight that during the yen carry trade fiasco, gold only fell 4.7%. While Bitcoin fell from 70K to 49, over 30%, and then subsequently made a new high very shortly thereafter. So the lower volatility asset value of gold the lower beta is actually very stabilizing to those that have considered entering the crypto market and should be held, in my overall opinion, particularly as we have yield curve inversions, all forms of risk factors on global conflicts and everything else building up. That downside stability is going to bring far more grounding and emotional stability for your portfolio for having. In short, it's less likely to crash 30 or 40% as the cryptos might. So having said all this, I want to refer to the XRP and gold, given that XRP is not trying to be digital gold. So I've asked the question of Grok, Ripple's gold integration plans. What are they? Ripple has indeed, says Grok, explored and announced plans related to the integration of gold into its ecosystems, particularly focusing on tokenization and what's known as real-world assets. When you see that acronym RWA, recognize it's the system wanting to put a digital proxy between you and your physically owned asset, which later will be very, very powerful and could even see the ownership change in an online transaction for which you yourself could be party to, or if you've undervalued your home and the new deal is if you undervalued it, people can purchase it at that price, could see you be turned into a tenant into your own home. I, as you can see, pretty suspicious of the global value of tokenization of one's physical assets, particularly with a predatory state that has a policy of inflation as a central banking rule and dragnets us into higher tax bands through this inflation and is essentially based on taxation through the inflation itself, marginal tax rates, and every other form. In short, there is the concept that you will own nothing and be kept in a happy state. How they might do that is open to everybody's imagination. So tokenization of gold, Ripple announced. So Ripple personally is very engaged with bringing on this new world of digitization of assets. It has announced a partnership with Gold to introduce tokenized real-world assets on the XRP ledger. This initiative aims to bring gold and silver onto the blockchain, allowing for more secure, efficient, and transparent ownership. Who wants transparency of ownership? I don't, actually. Funny enough, I'd rather no one had any idea. And trading of these precious metals. This is planned. So trading, I'm not a trader. I'm a long-term investment holder. Thank you very much. I'm a stacker, where each token would represent 1 gram of the corresponding metal. I think this will eventually be optional, later to become more and more compulsory. Market expansion. There's been suggestions on posts on X indicating that Ripple is positioning XRP to bridge gold-backed currencies. So when we think about faith in a system, deep down, the old hands and the old heads like something physical. They don't like the decree. Bitcoin is a reserve. It's traded up to that valuation. It's been pumped up by Michael Saylor, who's borrowed infinite amounts and just kept buying Bitcoin on an ever greater escalator of debt and chase up the bid. That valuation is now God for me. And it is, something I can hang my hat on. Some people have issues with that potentially. And also the fact that with quantum computing and many other reasons, who knows, it could be hacked, proliferated. There's been an inflation bug on Bitcoin before. Luckily, it was a white hat actor that pointed it out, so it could be corrected. The notion that this is perfect code and a perfect system with power and all its digital-based risks on it being non-physical doesn't make the old heads feel that comfortably. So here is somebody who is saying we will use XRP to be part of gold backing in currency. So we see a future where there will be multiple stable coins potentially, some of which will be gold backed by a certain degree that will be authorized, auditable, and XRP will play a role in digitizing certain options of money systems, which will give you all forms of currencies to choose from rather than being national, like the Swiss franc versus the dollar versus the euro. Could potentially be this gold-backed digitized dollar or that particular token that is not gold backed, is treasury backed, etc., etc. So potentially enhancing the utility of XRP. In short, XRP wants to be the lubricant, the oil of all the engines, allowing all sorts of useful things that some people might request or require. Brad Garlinghouse, the CEO, suggests that Ripple's stablecoin, RLUSD, could become the gold standard for enterprise-grade stablecoins, implying a significant role for gold in Ripple's broader financial ecosystem. So imagine a new stablecoin that has been released, by the way. It's just happened a day or so ago. It's gone live. That starts to become an industry standard, and unlike the treasury-backed USDT, is gold-backed, which actually is appreciating in the general sense year on year, whilst not like a crypto, is far more stable. Which one would you prefer to hold or use for your transactions? I could see the future of the RLUSD as a digitized dollar for which all our goods are still priced in, being very, very successful, and potentially in time undermining and taking over USDT, which is backed on treasuries. The T for treasuries, dare I say, it's actually for Tether, but who knows? And of course, USDT pivoted to utilizing treasuries as collateral at the very top in 2020. And thereafter, the SEC left them alone as they became big buyers, the 18th largest buyer of debt that Yellen is creating at that record rate. You see that little circle jerk right there? Fascinating, isn't it? Well, I'd prefer to deal in a dollar backed on gold, because there's going to be less calls for new collateral as the existing collateral continues to collapse. Remember our Jupiter that shrunk into a deflated ball and was severed entirely. If the debt-based markets collapse under an interest rate spike, how will that be confidence enhancing on the stable coin that is based on that? I'll take the one based on gold, thank you. Because during that period, that particular collateral will escalate immensely, is my prediction. Historical context. Ripple has a history of integrating with gold through initiatives like the Gold Bullion International. Use of the Ripple's protocol to enable trading, sending, and spending. So here we see actually a token that is being put forward that is more prone to be supportive of gold, A, as great collateral, B, as to facilitate its trade and its holding, rather than trying to impostorize itself and position itself as an alternative. Can I remind you that this CEO and his corporation has very directly gone straight to the central banks, provided their systems, their tokens for testing over an extended period for the inevitable event of central bank-based digital tokens being issued, for which the XRP protocol could play a leading role. More recent developments include Credit Suisse Gold accepting XRP as payment options for buying gold. So the token itself could be utilized for the purchase of the metal itself. These initiatives reflect Ripple's interest in leveraging blockchain technology to enhance the utility, liquidity, and accessibility in a digitized context of gold within its ledger, aiming to connect traditional finance with the digital asset space. However, while there's clear intent and some action towards gold integration, the full scope and impact of these plans are still unfolding. So what you have actually is a beginning of the relationship between the two surviving assets. And XRP tends to be the one that will be looking to facilitate that. There are already other gold-backed tokens and other protocols that haven't positioned as digital Bitcoin, that, like XLM and many others, but maybe not as advanced with their integration with the central banks and the banking system as a whole as this token. So what do I see happening? I see gold actually having a greater significance as a physical asset that is not prone to the digital asset volatility. And there will be times, as there always are, for the steady hand that generally will still be going up and actually will go up immensely in the environment of an interest rate spike. So why buy gold today, though, if I'm making all this discussion about crypto and the larger expansion that's going to go on there? Here's what I think. it isn't beyond the realm of possibility that we have another event where the gold price, we have a stopgap debt failure event, and the gold price is not reset at an entirely higher level, given a debt-based failure. And the tokenization of gold into becoming an asset that can be kept on the ledger could facilitate that. In short, nations that have a debt-based collapse could have their gold holdings hyper-valued or revalued to probably where they should be in many of our own minds in terms of the compounding inflation that the central banking cartel have inflicted on us over this period. In short, at such a moment where there is a severing of the legacy system, there could be a stopgap fail. And one of the outcomes, especially following Basel III, where gold has been recognized as an asset, is it's not easily purchasable anymore. There is light switched off, a circuit breaker event, and thereafter, gold is reintroduced at a far higher valuation and then will be tokenized. That will already be optional and begun, but then the obligation thereto might become more compulsory. There might be a pivot at that point, and that all gold needs to be recognized. They might make it by decree with threat of prison sentence, but the valuation would be set at a far higher mark. And the problem with that is, if you haven't purchased your gold, and you are too engaged in the inflation of the digital system, which could have a very high beta volatile period during such a reset moment as the resigning of legacy debt to a point of being close to zero, accepting its failure, maybe being handed some token proxy for those that are the holders to carry into the new system, such as a crypto token. We have already precedent where Bitfinex had a large amount of money hacked. They gave everybody who lost money a token notionally at the value that they lost. The token was quickly crashed to an irrelevance, and eventually the token traded back up to the full value, and those people that had it could sell out. However, most saw it just collapse in terms of its valuation, and that could be how they reward very much the Cyprus solution in terms of the banks going back, have shares in a bankrupt bank. Actually, a lot later, they have actually clawed back some value. And the Bank of Cyprus has climbed its share price. But for the next decade after the events, it was a busted flush and pennies in the pound were the solution. And most people did not have the stomach to hold on and wait for that recovery, especially as other assets were moving more strongly. Okay, so this is a scenario I see as a distinctly possible in this process of leaving the broken system slowly behind, carrying over with some compensation, which will be well below par for anyone who is caught staying in the legacy system. The bridge that survives all this and actually may grow in influence and could have a price reset for those of you that are not trusting of crypto in any form is, in fact, the precious metals, particularly gold, but silver will play some role in this too. So that's quite a lot to absorb. I want to highlight how flows could occur. There's a different way of saying the same thing, maybe utilizing some different diagrams. Let's see if this works for you. So the traditional market is contracting, bond devaluation is ongoing. By the way, in lieu of interest rates potentially going higher, the pressure will be put on property, and money could indeed come out of that and into gold, as well as all the way around and into Bitcoin, and slowly also seeping into the utility tokens that are less digital gold, but the applications and the rails of the new digital system. As money flows out of bonds, some does go into gold, and there's trickle down into silver as well at some point, and even potentially into platinum. And there is some that goes all the way around and straight into crypto. So both these will be getting inflated. The digital assets first, and that's going to drive the greed. Everybody will chase the greed. However, with these collapses and high beta markets, it's wise to diversify with the stability of some precious metals in terms of this this process that I feel we're going to be put through. And hence why the 33% that the legacy families that I have in mind have held in precious metals is probably the smart thing. The other 33% can be your stocks, and the other 33% for me would be participation in the crypto markets. And again, I respect for many precious metals and physical people that are focused that might represent an absolute anathema. But I'm here to tell you, so does Nvidia, so does Microsoft, so does Amazon, so does Apple. They all hold your nose trades in terms of the journey to the surveillance financial system that is planned. But with or without my participation, these things will be inflated. So you may as well take the ride and convert it into physical wealth, rural property, community, localization, precious metals holding, and take the wealth to buy your freedom. And for that journey path, a significant percentage should be in metals. And the warning is that in a stopgap fear event, remember all the yield curves that have reverted now, the volatility in the crypto markets, including Bitcoin, which has at least 80% collapses in its cycles before, the volatility in there for that additional reward can be stabilized by holding precious metals. And it has shown itself regularly in these collapses, including the events of March 2020, where it sold off and then went on to make the 2021 highs in terms of expectations. In short, the central bankers will still be net buyers. The digitization of assets is still an early development. I refer to it as we are going into the parabola phase of the second quartile of the normal curve in terms of adoption rates, people and adoption rates, and the size of the money. Where does the big money come? But its volatility will still be there. And when it ceases, it will no longer have that same level of growth. So stabilization to your portfolio, should you choose to engage, and my suggestion is you should contemplate the hold your nose status tokens, because they're going to succeed anyway. There's too much money behind it. This is the system they want you in. The stability therein is your metals. And most importantly, if we have a stop the clock system failure-based event, gold could potentially be re-rated in the market close downs of trading on a number of assets, much as happened when they revalued gold from $20 to $35. But rather than it being at that level, I would expect a far greater multiple. In short, we would probably get all the manipulations and all the resistance that has been placed artificially through debt and derivative and huge system mechanisms that have coexisted for an extended period. We'll probably see a single moment reversion of all of those to its true valuation, in terms of diminished dollars, diminished fiat currency of other nations as well. So the warnings are, if you're not engaged in the new system, you're going to see an acceleration in the devaluation of pensions, what they will be paying out versus cost of living. You're going to see an undescribed sudden loss of purchasing power that's going to accelerate well beyond that which you've already noticed in terms of inflation. The second wave is going to be harder than the first, and the third is going to take it to new highs in terms of the inflationary waves. And during this period, debt will be devalued by virtue of escalating interest rates. Property will be less easy to afford as a result of interest rates, and as a result, prices will come down. And as my final conclusion is, be engaged in the digital system and be heavily outpositioned in metals before the potential for you not being able to secure them in that reset thermostat breaker moment. I hope that's interesting to you. Those are a couple of thoughts trying to look forward on what could happen. This is speculation from me in terms of how this all goes down, but getting in front of where the money is flowing from and where it is likely to flow to, is very important for wealth building. And in the macro system, funds are going to flow out of bond debt, commercial property debt, all forms of this nature, which will see an escalation in interest rates. Where will it flow to? To the new digitization of systems. We are now seeing the early pensions starting to take on Bitcoin as an asset, as their bond portfolios are underperforming in their liabilities. They're under-resourced in terms of reserve for meeting their pension obligations, and that is their remit, and into precious metals. Also, the outlook for interest rate escalations will put pressure on property. The debt has to be devalued, and that is going to affect real estate prices. So in due course, eventually, there will be an opportunity to turn some of your crypto and your metals into reduced property prices in the property market for your ideal rural escape. Until I catch you next time, I want to remind you that ITM is a family-based business for multi-generational one, looks to develop not just a transactional approach, but a relationship-based approach for your ongoing metals needs. And it's always great to have a call, have a name that you know, get some of the inside skinny in terms of the volumes that are going in, how to position, what aspects of your portfolio in precious metals to buy, and you'll get that with them. And I would say in terms of US purchases, you don't go far wrong by giving the ITM guys a call for your precious metal needs. Hope this has been an interesting presentation for you, and I look forward to catching up with you in the future. Bye for now.